So we're going to look at now on Wiley the 6.4a example. And what I'm only going to show you kind of part of it. There's different parts down below this, but this is by far the, I don't know if it's that difficult, but it is a little harder. If you get caught up on, you lose your notes or something, it has a pretty good link to text on this one. So we're going to be filling out it tells us here, the income statement. So when I go down here, the link to text, yeah, it doesn't take me right to it. I got to scroll down a little bit. Find where I can, an income statement. Here it is, condensed income statement, just what the other one showed. And we're going to be almost identical following this format. It's right from the book. Okay? So if you do get lost or something and you don't catch everything, you could easily go to this and find at least the format that's supposed to be here. Okay, they give us, and I'm going to do this in two ways. I'm going to show you the T account first, and then I'm going to show you by units on the other side over there. They give us our inventory, and they tell us we had 20,440 to start with, our beginning inventory. And then they tell us here, well actually right here, how much stuff we bought through the year, plus our purchases of $878,044. If I add these two together, what's the new term that I'm going to put in my mathematical little formula on the other side? But this would, if I add these two together, this total is telling me what?
Cost of goods available.
Good, yeah. Cost of goods that are available for sale. So I have $898,484 ready to be sold. And then when I do sell them, this is one of the numbers I'm going to have to figure up. I get rid of them and I call it cost of goods sold. And once I get rid of it, then I can determine my ending inventory. Notice, they don't tell me how much is in the ending inventory. They just tell me how many. Why wouldn't they be able to tell me how much? How come they can't tell me 16,440?
It's different for the FIFO.
Yeah, it's going to be different. If I sell FIFO and I'm getting rid of these guys, well, my cost of what's in the end is going to be at this rate. But if I'm doing it LIFO and I sell all of these guys, the cost will be at this rate. So my ending inventory will fluctuate depending on which method I use. So as we're going through, this is kind of what you want to be thinking of as you're doing this income statement to get, because we don't know what the cost of goods sold is. This is one where they want us to figure it up. And to get cost of goods sold, remember this formula I had on the board last time. We take our beginning inventory. We had, I'm doing this side over here in units. We had 10,220 units. And then you always want to add in your purchases. What you had before, what you just bought. I just bought 277,400 units. Again, that tells us how much we have available for sale. So I have 287,620 units. I subtract out how many units. It's kind of, you can say COGS here, but it's not really the cost. It's the units that I sold, units of the goods sold. How many units did I sell? I don't know this number. It doesn't tell me how many. Well, it does kind of tell you. But we can figure this number out. Let's pretend it didn't tell us this. Well, no, sorry. That's total cost of goods purchased. It doesn't tell us that. Good, I'm glad it doesn't. It doesn't tell us how many units I actually sold. It tells us how many units I purchased. Well, I got that right here, the dollar amount, and the 277. How many units did I sell? Don't know, but I can easily figure it out because I do know how many ending units I have. It tells me that up here. I have 24,820 left. So how many units did I actually sell? Somebody figure this up.
262,800.
262,800?
Yep.
Okay. All she did is just took the difference between these two numbers. 287 minus the 262, what I sold, leaves me with 24,820. All right, using these two things, I've kind of set myself up to do this problem now. If you don't do this kind of pre-work on a lot of these Wiley Plus, then yeah, the Wiley Plus is going to seem pretty hard. But once you kind of separate it out and get it into some things that you can understand better, then actually filling in the amounts becomes quite a bit easier. It's not easy by any means, but it becomes easier. All right. How does the income statement always start out? What do we start with?
Sales revenue.
Sales. Okay, so I'm going to put in there sales revenue. And it tells me in your problem what my sales were. 1,090,620. Now when I do this problem, I'm going to be focused on mainly the FIFO numbers. But where possible, I'll go ahead and put in the LIFO if I don't have to do any separate figure. Would my sales figure be the same, or is it going to be different using LIFO? Same, yeah, it doesn't matter what method I use when I sell them. I still brought in $1 million and $1,090,000. Notice it tells me this is my net sales. So they already took out for us the sales return and the sales discount. Remember, we had gross revenue minus the discount, minus the returns, gives us net sales. What comes right after net sales then on the income statement? Sales minus what gives you?
Inventory.
Sales minus, not inventory, but it's close. Sales minus, what's
Cost of goods
cost of goods sold? Yeah, that's what I'm going to be figuring here. I want to figure the cost of goods sold in this problem because it doesn't tell me what the cost of goods sold. I need to figure it. Now, using what I have over here on the board, I can determine the cost of goods sold. What's the first thing I need to know to determine cost of goods sold? Louder. I heard it. Somebody said beginning inventory. The problem tells us what our beginning inventory is. I have that in my T account here. 20,440. Is the LIFO number going to be the same or different? Same. I'm going to place that into. What do I need to know next to get my cost of goods sold?
Cost of goods purchased.
Good, purchase. And I have that here too, 878,044. LIFO, same or is it going to be different? Same. I still bought the same stuff. Still haven't sold anything yet. Beginning plus cost of goods purchased, and this little line tells me I'm going to have a total coming. These two equal,
Cost of goods available for sale.
yeah, available for sale. And I did that here. 898, 484. No change over here yet. Now, if I want, this is the only thing that's a little bit different than my thing. If I'm wanting to solve for this, what I could easily then, if you were looking at this part only as kind of a math problem, and you had the 287, 620 minus x equals 24, 820, you can easily move these guys around, and so it comes out and you don't have an x in the middle, you just have one final amount. So I could easily add x to both sides and subtract 24,000 from both sides. And then I have 287 minus my ending inventory. So that's what comes next. My next number in my process of determining cost of goods sold. Now's the first time I need to come back up to my chart. When you're doing this one, this is kind of what we want to look at, but we don't want to forget these guys. Very easy to do. So what I like to do is I like to write them in right next to it, right above it, so I know I don't forget them. In the beginning, I have 10,220 units costing 20,440. I like to have those right there because it's easy for me to forget them when they're up here. Now, what we're looking for, my next step here is how much do I have left in ending inventory? I'm doing it the FIFO way, first in, first out. So that means first in, first out. Which guys are going to be left ultimately? The beginning ones or the end ones? If I have first in, first out. The end ones are going to be left. These guys are sold. First in, first out. I sold all of these. I only have 24,000 left. 24,000 can easily fit into this grouping. So I only have 24,820 at this dollar amount. $24,820 times $3.41 a piece. And it tells us in the problem to round to 0 decimal places, so 84,636 is my ending inventory. Same or different for LIFO?
Different.
different, so I don't want to mess with LIFO. I'll come back and you would do LIFO later. Okay, so we've got this far. What's my last entry that I need to put in here? I now know what? Cost of goods available minus my ending inventory equals cost of goods sold. That's what I'm looking for. That's what this whole section is wanting, the cost of goods sold. And this is how I did it. Cost of goods sold, therefore, is what? What number goes right here? Somebody tell me. 800 and some thousand.
813,848.
Okay. So when you're looking at an income statement, what goes right below cost of goods sold? You get sales minus cost of goods sold equals just a regular income statement. Sales minus cost of goods sold gives you what? Gross profit. Very good. Sales minus my cost of goods sold that I just determined gives me my gross profit. I got 276, 772. Just after the gross profit comes what? What do we put on the income statement right after we determine what our gross profit is? Expenses, yes. Good. Very good. They tell us on this one, they went ahead and grouped it. That's why they're calling this a condensed income statement. They don't actually list all of the expenses. They just tell us what it is in one big chunk. So we can do that then. We have operating expenses of $134,200. Operating expenses is just saying, it's just combining like my wages and my advertising, rent, anything that I had to spend money on to get the business going, or to keep it going. Now, typically, profit minus your expenses equals what final number? What's always the bottom number of the income statement?
Your net income.
Net income. Now, the only reason why this is not considered the final net income is we are looking at a corporation here. Whenever you see Inc., I-N-C, that stands for incorporated. When it's incorporated, corporations have their own tax. And you always want to tax yourself at the least amount possible. So after all of your expenses, then you want to tax yourself. So right here, this is our income before we calculate our final taxes. We can easily figure that up. 276 minus the expenses. that last expense, income tax, it tells us what the income tax rate is up here in the problem, 40%. So 40% of this figure is how much I have to pay the government. Again, we're going to round to the nearest dollar, 57,029. And then the final one is our net income, our final figure. The bottom one, always on an income statement, is your net income. So simply now subtract out the 142 minus the 57,029. My total final net income is 85,543.
The expenses, the income tax, or income before tax and the income tax, those are all gonna be the same, correct? So on the LIFO side?
Yes, on the LIFO side, this number will be the same. That is correct. However, the rest of them will not be. The income tax expense won't be the same because your income before taxes won't be the same.
Okay.
This number will cause your cost of goods sold to be different, will cause your gross profit to be different. The expenses are still the same, but the income tax is based on whatever this number is. Okay. One other one that I want to take a quick look at. We're not going to spend nearly as much time on this one. Just to look at maybe two of them. So this company has some problems with their accountant and how they are accounting for their inventory. Do they have enough? Do they not have enough on their books? And it's telling us that how the company finished. They finished with 808,000 in listed inventory. Now I'm going to go through number one here, and then number 5, the two that I want to look at. Notice that this company did usually some stuff wrong, but not every one of these is necessarily wrong. And it tells you that here. It says enter 0 if there's no effect. Basically, if the company did it right, if you read through it and it looks like they did it right, then just put 0 in that box. But if they did it wrong, then we have to adjust. So let's look at that first one. Included in the company's account were goods. So that key words here we need to recognize. We included it in our inventory. We are holding items that are on consignment. The goods belong to somebody else. I'm the Shuta company, and I'm holding goods that Harmon owns. Somebody give me a quick little definition of what the word consignment means. If you hold goods on consignment, what's that mean? And maybe give me an example.
Doesn't that mean that they're not included in your inventory, but
Why?
because you haven't purchased the goods?
Because somebody else owns them.
Yeah?
But when you sell them, you get part of the profit.
Yeah,
Right.
yeah. Give me an example.
The car salesman, if you, I think I read this somewhere, if someone wants to sell a car like a car lot, and whoever's selling it just takes like 5% commission.
Okay, that may be one. Yeah, if they may do that. So he's saying, you have a car that you're looking to get rid of, and you go to Ed Martin. I don't know if they do it, but you go to Ed Martin. You say, Ed Martin, can you sell this car for me? And they're like, okay. Well, it's still your car. And then when you sell it, they give you the money, and then they just take off a percentage as a collection fee. You still own the car until it's sold. Ed Martin never owns it. I also think of in newspapers. If you go to Rickers or some other gas station, and they have the Muncie Star Press right there, or the Indy Star, they don't own those newspapers. If they don't sell them, they send them right back to the newspaper company. So they're not out money if they don't sell them. They just get a profit if they do sell it. That's still Herald Bulletin or the Muncie Star Press or whoever it is. That's their newspapers, not Rickers or the gas station. So in this situation, it says we added that $206,000 to our inventory. Should we have? No, so it was a mistake. We don't want that $206,000. That should be off of there if it was included. So the first thing you always have to do is if there was a mistake or not. If there's not, then you just put a 0. If there is, then we got to determine what we need to do. Skip down to number 5. On this one, it's going to help if you have a T account going. All right, we shipped goods. We brought in $84,000. They cost us $58,000. I'm going to put that on here. We shipped goods that cost us $58,730. So we lost inventory. FOB shipping point, that's important. FOB shipping point means that the goods transfer title as soon as they're shipped, whereas FOB destination means they don't transfer until the other person gets it. So it would be, we did it right here, that we would count this as items gone. It was shipped off on the 29th. So, yep, we don't own the inventory anymore. It doesn't matter that they arrived on January 3rd. When they tell us this information here, the destination date is irrelevant. However, this company only ordered $13,000 worth, but we shipped them $84,000 to kind of bump up our sales a little bit, knowing that they'll return it. But at the end of the year, our sales look pretty good than if we only shipped them $13,000. And it should have only cost us $8,000. You can't do that in accounting. That would be illegal. That would be cooking the books, or however you want to think of it. We really only got rid of $8,000. That's all that the company wanted. $8,000 of our goods costing this much to them. They didn't want this much. We know that they're probably going to return it. So what do I need to do? If I already took out $58,000 and I should have only taken out $8,000, what do I need to do on number 5 to fix it? How do I need to fix my ending inventory?
Debit it with $50,730.
Yeah, I need to debit the difference here. I need to put back into my inventory $50,000 of goods because I really didn't sell them. I need to show that we really have $50,730 more than what my beginning number was.